How are you doing, Jorge?
All right, thank you for that intro. Excited to be with you guys this evening, and so I guess I'll start by telling you a little bit more about myself and my background. So, roughly about 14 to 15 years ago, I decided to become a full-time real estate investor. I was an electrical engineer, and I just wanted to do something more than what I was currently doing. And I knew I wanted to do that while studying, going to the university. So I started also looking into real estate investing. Finally got enough deals done where I quit my W-2. Throughout that journey, I decided to also open a construction company while I was trying to scale so I started in single family real estate investments. And to scale that, I decided to open a contracting company. Everybody around me thought I was nuts, but it helped. It helped scale the business. And now that my main focus is multifamily, so about 4 years ago, I was in a grind for ever since, so maybe 10 years, just grinding it out. Building the business, construction, and the single family investments. And then kind of hit me. I kind of woke up and I was like, okay, what have I done for the last 10 years? And I felt like I at some point went down direction I didn't want to, which my goal when I first started this was to build generational type wealth, and to gain some more freedom as far as time and just financial freedom. Time was definitely not on my side at that point. Trying to scale the single family while also growing the construction company. So I looked more into multifamily. Figured out that I could syndicate a deal, bring investors together, and take down these large multifamily properties. And once I saw the benefits of that, as far as tax, cash flow, and then whether it's a refi or a sale of the property, you end up with a nice returns on your investments. I turned my construction company and my investments. I focused everything towards multifamily at that point. So that was about 4 years ago. And now I've got 1,720 doors under management, roughly over 110 million under management. Looking at a couple more deals right now. COVID's made things a little difficult on the buy side, especially for what we mainly focused on was heavy value add deals, heavy lifts, leveraging the construction company to come in and do the work. Kind of had to change that a little bit, just because bridge loans have become pretty difficult to get, at least at good terms. Still looking for value add deals, just maybe not as heavy as before. So as far as, that's my background. And then I believe Matt wanted me to kind of go over CapEx and due diligence. Is that kind of what you want me to focus on mainly?
CapEx, construction, heavy renovations, what's it take? How do you get through all that?
Yeah, definitely.
And I think we have some questions that we can ask when you're done.
All right, here we go. So I'll try to run through this, at least the beginning, fairly quickly. Kind of already gave you, this is just a quick disclaimer saying, like, some of the numbers I'm going to throw out here, they're rule of thumbs and they're very specific to areas. So just don't take the numbers I give you and run with it and figure that it's 100% what it's going to take to fix the properties. And then I can give this link later on. Actually, it's one of the last slides, but you can get a copy of these slides if you go to this link. Actually, probably better if I can't copy it there. Yeah, I'll copy it and put it in the chat later.
That'd be perfect.
Yeah, some of the things I'll go ahead and cover. I already kind of went over who I am and my companies. So you've got Elevate, which is the company we acquire the multifamily properties under, and then JNT Construction is the general contractor. Then I'll go through kind of the beginning, from when you're evaluating deals, what's before you even get something under contract, what are the things you should be looking for. I'll go through some high-level numbers that you can use for your rough CapEx budget, what you should do at a property tour. Then once you do your property tour, how you can finalize your CapEx budget, get the numbers a little tighter. Then what you should do during your due diligence, what you should avoid, and then finalize your scope of work and budget after that due diligence. And then pre-construction meeting, so pretty much, you're past your due diligence, so how do you gear up to actually get the work done when you close? And that would be your pre-construction meeting, and then a couple other little bonus items I got there. Already went over myself. This is my team, Elevate. As far as a construction company, we focus on full service general contractor. We work mainly with investors and business owners in Texas, Oklahoma, and looking into possibly some other markets as well. These are just some before and afters of some of the projects we've done. This was smaller property, 37 units, but as you can see, we did a full transformation of it. Pretty much, I think we got rid of almost the entire tenant base in that one. This was one that we did for a client, and as you can see, big change. We like painting the brick a lot. Some people don't like that. Yes, it causes more maintenance to keep up with the paint, but it just makes such a dramatic change. Some more before and afters. Some of the clients we've worked with. And then here we go. So you've, let's assume you've looked at a deal that's come across your desk, and you like what you see, and you want to go, the initial numbers kind of pencil out, and you want to go take a look at it. So here's a list of questions that you should ask the broker, the owner. Now, some of these are a little detailed, and they may tell you they're not going to give you the answers. Pretty much what you want to do is tell them, look, the more information you give me right now, the better my offer is going to be. The more confident I'm going to feel going up on my price if I know exactly what my CapEx is going to cost and what exactly I'm purchasing as far as the property. So I'm not going to read this whole list, but a lot of it has to do with the units and really getting detailed on how many are upgraded versus how many are classic and what the upgrade looks like, and actually putting numbers on it. The CapEx, the CapEx should be, the completed CapEx should be fairly easy for them to supply. If you're dealing with a somebody that is not a third party and maybe doesn't have the best records, it might be a little more difficult. And at that point, you may be dealing with a pretty good deal, so it might be worth doing your own homework on that stuff anyways. And then a lot of the components, mechanical and electrical type questions. Then you've got your really high level, like high level numbers. If the property's been recently renovated and you've got very little deferred maintenance, $3K per unit should give you enough to kind of freshen up some of the units and maybe do a couple items here and there. If some of them are needing renovations and There's some pretty obvious deferred maintenance. Maybe the roofs definitely need to be replaced. $6K per unit. And then if you've got a lot of down units, you've got to renovate the majority of them. Definitely got deferred maintenance. $10K per unit. Like I said with the disclaimer, these are really rough numbers. Don't just grab these and go with it. This would just be when you're first evaluating the deal. And then I would grab that, the answers, whatever the broker or owner answers on the CapEx, and then some rough numbers. Here we put 6,500 per unit. And this is what tells us, this deal is, okay. End of year one, it's producing 8.78% cash on cash, and then year two, 16%. To me, that's enough to dig into it. So that would be our first step. And then after that is when we would actually schedule the property tour and go out to the property tour and take a closer look. These are some items that we would take a look at when we go on site. We would definitely ask to see the vacant units and to try and at least get into the different, like if there's classic, okay, set us up to see a classic, set us up to see a full upgrade, and set us up to see whatever else you have. Down units, we always want to look at the down units. I'll tell you this, don't be surprised if you catch a seller lying to you on the down units. It's happened to us several times, and you kind of just need to continue to dig and ask questions. One time that comes to mind is it was an off-market deal. We were dealing straight with the owner. It was a property tour, but we kind of already had a agreed upon price and ready to go into an LOI. And we asked to see all the down units, and I can't remember exactly what the seller did, but he kind of tried to distract us from the downstairs of a building and like take us up. And I noticed that one of the doors were kind of cracked open, so I scooted over there and started just asking him, like, hey, what's going on here? Why is this? Turns out that whole bottom floor was flooded, and he was just gonna completely ignore that. And to say the least, that deal didn't work out. Not just because of that, but there were other reasons, other things they were hiding. Let me see other things to point out here. Windows, roof. The roof can be the big ticket items is kind of what you want to look at here on the property tour. As far as the roofs, if you can somehow get an idea of what they look like. A lot of the times the owner is not going to let you climb onto the roof or have a professional come until you actually have it under contract. And then kind of get an idea of what upgrades you're going to do as far as the amenities. Obviously the units, once you look at them, try to get an idea for the AC units or the boilers. No reason they can't let you into the mechanical room while you're doing a property tour. You're not bothering any of the residents. And this is a video. I'm not going to play the whole thing, but just to give you an idea of what you would do at a property tour. Can you guys hear that?
Oh.
No? I'm trying to raise the volume. Okay, I'm gonna shut it down because I can't get to the volume. It's pretty much me doing exactly what I just said and kind of running through it. So, if you choose to get these slides, you can watch it and get a better idea. And then this is to kind of cover some rough CapEx numbers. So let's say you walk it, and once again, these numbers are really rough, but as far as the interior, let's say you're going to paint everything on average, that's including the cabinets, roughly 1,800. If you're going to replace all the hardware, which means doorknobs, bathroom, like your towel rods, your cabinet knobs, you're looking at about roughly 500. If you're going to change the lighting and plumbing fixtures, 1,000, appliances, 1,000, flooring, 900, and then resurface tub and counters, 500. And then I've got some numbers here for the exterior, as far as just trying to give you guys something to base off of when you're doing your rough numbers. Once again, don't hold me to these. And then ideally you would have somewhere to enter this information and start to build a more educated CapEx budget. And this is simple spreadsheet we use at this point. And I'm actually working on getting it to feed to make it even easier for investors, where you literally just enter the building numbers, the unit numbers, the square footage, and maybe a couple other items, and it will automatically spit out some numbers based on the square footage or the door count or the building count, depending on what it is. It's a work in progress. I will definitely let everybody know when it's ready to go. And yeah, that's just continued. This is that same 216 units. So as you can see, my rough number was right under $1 million. And we ended up being, I think 1.1 is what it actually ended up being once we did our due diligence and finalized the numbers. So I mean, pretty darn close. Then you go into your due diligence. So I guess I skipped the part there. You did your property tour. Numbers looked good. You adjusted your numbers on the CapEx and you made your offer. They accepted it. Then you've got your due diligence period. So this is the time to get extremely detailed. You've got to be efficient. You've got to schedule this correctly. You've got to hire the right people to help you with it. And this is the time for you to dig up anything, that's wrong with the property, so that you can, if there's something major, you can go back to the seller and pretty much negotiate on the price and make sure you're not short on your CapEx budget. So some of the things as far as that you want to make sure you check and you have a professional go out there and check. So on every property, we scope all the sewer lines. Having a sewer line that leaks underneath a property is not a good thing. I mean, you're going to have to possibly move out some residents and break the concrete and do a ton of work. So if that's the case, you definitely want to know that up front. Boilers and chillers, that stuff just costs a lot of money to replace. So once again, you want to know if they're going to last and what type of maintenance has been done on them. So you want to get those checked by a professional that's licensed to work on those. Foundation and drainage, same thing. I know foundation's more of an issue in Texas, but it's still something you want to check pretty much anywhere. You could have other issues with the foundation. And then termites could be a problem, and your roofs. One thing I haven't mentioned is, I feel like I keep destroying sellers here, but it's kind of, it's my job, it's my background to make sure the CapEx part of it is right. So just, if the seller ever tells you the roof was replaced a year ago, or the boiler was replaced, yesterday, still get it inspected. Like 100%. Don't take the broker or the seller's word for it. And maybe they didn't hire the right contractor to do it. And maybe it was just installed yesterday, but whoever installed it had no idea what they were doing, and it's still going to cost you a ton of money to get it done right. So, a couple different ways you can handle due diligence. You can try and do it all yourself, which I don't suggest really. It's all right. So then the second option, right? If you don't want to do it all yourself, you can hire some professionals to come in and help you with the due diligence. One, if you have a third-party property management company, usually they're going to come in and help you with the lease audit and some other items, and usually they're going to do it at no cost if you're hiring them for the property management. Then you can get a general contractor to help you kind of schedule everything and set everything up with all the items I just finished mentioning. Depending on how much detail you want, there may be a charge for that. There may not be a charge. And then you have your unit by unit walk. So I do suggest walking every single unit. Doesn't matter if it's 20 units or 1,200 units. You want to know what you're dealing with. You want to know how many upgraded units, how many down units. It'll make a huge difference in your CapEx budget. So to do that, you can, once again, do it yourself with your team. Some property management companies will also help you with that. There's some, and then there's some third parties that will help you as well. Just make sure that there's a way to track it and that it's actual useful information once you're done walking the units. Oh wait, I just wanted to show, oh shoot, sorry. This one's a quick video and just gives you an idea of how many crews and different people can be on site during due diligence. Yeah, so just quick little video. We probably had about 30 people there at any given time, all looking at different aspects. Then a few things you don't want to miss for sure when you do your due diligence. I think I already spoke about the roofs, but you definitely want to inspect those. Big thing is make sure you also inspect it for storm damage. And that in your contract, you actually get in there that if there is storm damage that's discovered during your due diligence, that the seller will file with their insurance and that they will transfer that claim over to you. This is huge. Like, we're talking about lots of money, brand new roofs without you having to pay anything. We've done it several times, and there's a lot of hail and wind damage that property owners just don't realize they have, and the insurance isn't easy to deal with these, so you definitely need to get somebody on your side that knows what they're doing to fight them on it. It's not like single family homes where, I mean, you have to fight them on single family homes sometimes too, but on multifamily, they're going to bring an engineer. They're going to fight you every time just because it's obviously going to be a large claim. And termites, definitely want to get somebody out there that can take a look and look for active termites. I said foundation and drainage. On your foundation and drainage, don't forget the drainage part. Very important. A lot of the times, foundation shifting is due to poor drainage. And some foundation companies will just come and tell you what's needed to lift and level the foundation, but they won't address the actual issue causing it. So be careful on that. Your exterior walls, balconies. So you don't want to just look at the exteriors and be like, okay, we need to paint that. You want to take it one step further and make sure that you're getting the actual exterior materials inspected. How much rot is there? let's say it's stucco. Stucco is known for failing and holding a lot of moisture. So you want to make sure you don't get stuck with a property that's got some unforeseen issues just because you didn't inspect it enough. Okay.
Excuse me, George. Are we gonna be able to ask questions as we go along, or we're gonna hold them off to the end?
I was thinking to the end, but I mean, we can open it up. I don't mind doing that either.
I have a question. I saw somebody else post the same question. These lists that you mentioned, are they like in Excel format? Are they printed? Do you use a specific software with an iPad, or how do you accomplish all of these points to make sure that you don't miss any of them?
Yeah, so everything but the due diligence, we're talking about checklists, and we go through and we make sure everything's checked off. Once we get to the due diligence, we do prefer to use software. We've used a couple different ones. The last one we used is called HappyCo. It's not the cheapest, but it is the most user-friendly and efficient as far as time. Does that answer your question?
Yes, it does. Thank you.
Okay.
I could add on to that as well.
For sure.
I know we've done our due diligence. We simply just created a Google sheet that everybody had shared, and then we just use our iPhones to kind of input that and add there. As far as like the unit walkthroughs go.
Yeah, Jordan, we've used, we've also done Google Forms, where everybody has the form and they fill it out, and then it spits it out into the same spreadsheet, the same Google sheet. That wasn't horrible. So the one that we used HappyCo on was a 1,300 unit portfolio, and I was a little worried about 1,300 units. I definitely wanted something that I can do a little more with, and then you've got the pictures and how to track all of that. In the past, we each just kept record of it, whoever was doing the inspections, and we'd take a picture of the unit number first and then take the other pictures. But I guess it kind of just depends on the quantity of units and what you want to do with that information. All right, I'm going to continue unless we got some other questions right now. I am not looking at the questions, so Matt, I don't know if maybe if you could do that, and if you see something.
Yeah, I see the questions. Unless it's pressing, I think we can wait till the end.
Okay.
Davide, does that work for you?
Yeah.
Yes, absolutely.
All right, cool.
All right, and I'm getting there. I think the slides are almost done. So after your due diligence, and I don't see this happen a lot with other investors, honestly. Not sure why, but is to finalize your scope of work and have your budget ready to go. Pretty much compile all the information you gathered from your due diligence, and then get with your team and kind of decide, okay, what are we going to do? What are we going to upgrade? What are we going to replace versus repair? And then get that number. And once again, this is your time to go back to the seller if you find anything that's alarming. So you definitely want to know what that total is going to be, and make sure that so a tip here is, make sure you get some real estimates. It's a lot. The last thing you want to do is retrade on a seller. But if you do, and it's for a good reason, make sure you got backup, that you've got actual estimates, and showing them, hey, look, these sewer lines are busted. It's going to cost me $80,000. I had whatever, 2 plumbers look at it, 1 plumber, whatever it is, here's the estimate. Here's the the camera footage if you want to look at it, and that would make it a lot easier versus just telling them you need a discount. So once you've got that and you're trending towards getting the property closed, or you've closed it, you want to schedule the pre-construction meeting as soon as possible. And this is pretty much where you're going to get everybody that's involved together. You're going to get your general contractor, your property management company, your lead maintenance, whichever partners, GPs want to be involved in it. If you're going to have a design team, you get pretty much everybody involved in the CapEx so that everybody is on the same page from the beginning. And that should be, a full day meeting, meeting like we are here, in this picture together and going over stuff, and then also walking the property and still making sure everybody's on the same page on what the scope is. So this is just quickly how to properly hire a contractor. You want to make sure they're reputable. You want to do your research before you pull the trigger. You want to make sure that they work on multifamily projects or large projects, that they're not a single family general contractor trying to do multifamily. They're not going to have the right crews. They're not going to have the manpower. Nowadays, they should definitely have an online presence, whether it's good or bad. They should be online some way, some form. So check that stuff out. Ask for references. Actually call some of the references and talk to them. Ask to see some case studies, whether it's you physically go see them or at least some pictures at the minimum. Make sure you ask them for their insurance and that you get added as additionally insured. And then see what other credentials they have. Down here I put some examples of the credentials that my construction company has. The reason those are important, yes, most of those you have to pay to be a part of, but you also have to go through some vetting, and you have to meet some standards to get accepted. Then make sure you ask them detailed questions before you hire them. Ask them, one, make sure they have a detailed scope of work. Last thing you want is a paragraph or even a page of just writing. Like, you want line items, you want it detailed, you want to know exactly what you're getting. You want to know what type of materials you're getting. At the minimum, you want an allowance. If you don't have the exact item, you want to know what the allowance is for the materials. Unless, of course, you're supplying them yourself. But communication, you want to ask them about how do they communicate during the project? What is their process for change orders? What's their process for material selection, scheduling, just everything. You want to ask them about their project completion. So, what is their procedures once a part of the project is completed? Is there a walkthrough? Is there not? That way everybody's on the same page and expectations get met. I will say this, I'm telling you to ask the contractor a lot of questions here up front. Hopefully you do. And then once you choose the contractor, you've done your homework, and you feel like you've got the right fit, treat them like a partner. I see it a lot too, where the clients kind of want to push the contractor around or just fight with them on stuff. Trust me, it works a lot easier when you both have the same goal, to get the project completed, right? Makes it a lot easier when you're working together on it versus against each other. Couple other good tips, and then I think I'm ready to open it up for questions. So as far as value add to the properties, a great one is adding more units if you can. We've taken space before that wasn't being utilized to its fullest extent and made units out of it. Obviously, that's going to increase your NOI. Most of the time, you're going to be able to get the work done cheaper than your return on investment. And then what else did I have here? So a lot of cedar. Yeah, I mean, cedar's still trending. It's still in, and it still works. It gives a property a lot of character, especially some of these older 60s, 70s properties. If you just add some cedar to the siding, or shoot, you can even take some cedar to the brick if you want to add a little more character, and it really makes it pop. And then depending on your property class, adding some tech stuff to it definitely is a huge value add. And simple things like USB ports, replace a couple of the plugs with the plugs that have the USB ports. And then want to take it next level, Wi-Fi in all the common areas and even throughout the building is a huge plus. Then a couple affordable amenities that you can add to a property. Dog parks, super simple to do. You just got to have the space, fence it in. You can do a pretty affordable fence for a dog park, and then you just got to buy a couple accessories to go with the dog park. Barbecue and sitting areas, that's always an easy one as well, not too costly. And then repurposing some, let's say you can't make an area into a unit, but it's still not getting used that much. You can try and repurpose it for something that the tenant base is gonna use. Like I have here some office space, clubhouse, and just depends. You're gonna have to know your tenant base, and a lot of the times you can also kind of set a budget apart. So I'll give you an example. One of our properties, we had originally thought about doing a dog park and kind of left it as a question mark because we weren't 100% sure if that's what the tenant base was going to want. We did a survey a few weeks in, and we realized that they really wanted a soccer field. The kids were playing soccer all the time in this open space, and they continued to break windows because they were playing soccer. And we ended up flipping that dog park to a soccer field, and they're ecstatic. Interior unit renovations. So a couple little tips, if you're going to replace the countertops, going with a stone or granite is really not that much more than going with new Formica, and it's a huge plus. It looks nicer, and it should last you longer as well. Replacing the plugs and switches, it makes a huge difference. Makes it look a lot cleaner. And they also sell the ones where you don't have to replace the plugs and the switches, where it actually covers the full switch and the full plug. Those work nicely too, because then you don't have to pay for the labor to actually remove the plugs and switches. And then cabinets, if you're thinking about replacing the cabinets, but yet the base is in good shape, you can always change out the fronts, and that's going to save you some money. And then dramatically changing the curb appeal, obviously painting the exterior, taking it a step further. If you want to paint the brick, that would make a huge difference. Rebranding the property, full rebrand, changing the name. A lot of the times these properties that are heavy value adds have bad reputations, so we've had to rebrand quite a bit of properties. Believe it or not, parking lots, man, if you especially asphalt, if you've got an asphalt parking lot and you come in and you just seal it and restripe it, it looks brand new and looks real clean as you pull up to it. Solar screens are huge, man. If you got older windows, older vinyl, not so nice looking windows, and you don't have the budget to replace them, doesn't make sense to replace them, slap some solar screens on there. It'll change the look entirely. And then obviously landscape in certain areas too, be real specific about where you do it, and go all out in the pretty much the path that a new or a potential resident would take to the leasing office or driving by the property. And this is just some pictures of some common areas and ways to make them pop. Backsplash, wrapping this fireplace in tile, things like that. Won't go into too much depth here. Just systems are important no matter what you do. We've had success with our contracting company because we follow, like I said earlier, we've got a checklist for everything. We've got a procedure throughout the entire project for any steps. And then you've got all my contact information here on this slide. You've got the link. Let me see. Yeah, so I'll go ahead and copy this link and put it in the chat. And then we can open it for questions. I don't know.
Great. Thanks, Jorge.
What I'm doing.
We really appreciate it. All right. So I got a couple questions here. So I'll start at the top.
Okay.
What tool do you use to keep track of your per unit due diligence?
So that same, I've done quite a bit of different things. HappyCo does have the option to do that. I haven't done that yet. I may try that out moving forward. We use our project management software to do that. We've used quite a few different softwares. I think what we're going to be doing moving forward is Builder Trend, and it's not really for. So if you're not a contractor, it's probably not right for you. We like it because it gives our clients access as well as gives us access, and tracks our accounting and everything. As far as if you're more on just the property management side of it and the ownership side of it, I know some of the other like AppFolio and those softwares offer something. I haven't heard great things about it, but yeah.
All right. Have you done a new build? And if so, can you talk about that?
Yes, I have. And I cannot find the chat. How to chat something?
No. It should be at the bottom next to the share screen.
Yeah, that's where I was looking. I guess I'm gonna stop sharing.
Okay.
Yeah, I think if you guys want my information, make sure you take it down. And I'm gonna go ahead and put that link. Yeah, that's what was stopping it. So now I can go ahead and do that. New builds. So yes, I've done quite a bit of new builds. Started with the single families after a while of doing the fix and flips. And as the market got hotter, we started getting more and more creative as far as how to build, how to add value to those single family properties, to the point where we started adding second stories, additions, to the point where we just started knocking them down and building new construction. And not like your tract homes. These were retail price 1.4, 1.5 million. So more of your custom type. Then we got into doing some smaller multifamily, some eightplexes, fourplex, eightplexes. We did quite a bit of those. Once again, more on the on the higher end, close to downtown Dallas, and then worked our way up to larger new development. Just wrapped up one that's 236 units. Working on another one right now that's going to be 250 units. The difference, I guess, from acquiring the existing and the new development, a lot of it is your different exit strategies. So when you're starting with just land, and let's take it all the way to the point where it's not even zoned and it's not build ready. Let's say you purchase it then. So many different things you can do from there. You can get it entitled, you can get it zoned, and you can bring the utilities to it and sell it then and make a decent profit if you got it at a good price. You can move forward and then start going vertical on it, and you can actually sell it before you even start filling it and leasing it up. You can lease it up to a certain extent and then sell it, or you can hold. I feel like I missed a couple things. You can also split it up into different plats and sell off pieces of it, keep other pieces. Then on the investment side, so as far as raising equity, if you're gonna go the new development side, is your investment base is got to be willing to wait. There's obviously no cash flow while you're building, so depending on your exit strategy, there's going to be a period where there is no cash flow. Now the benefit is the returns should be a little bit higher than they are on a existing multifamily that's already cash flowing, day one. I'm not sure if that's exactly what you wanted me to cover on the new construction. If you have some other questions, feel free.
Yeah, I want to ask you, Jorge, have you bought land and then gone through the process of development and then construction?
Yes.
Okay. Can you just walk us, or me at least, through just high level, the whole process, time it took you, maybe what was the biggest hurdle you came across?
Yeah, so the one project where I've been involved from the land aspect is still in the works, so I can't give you all the way to the end, but I can kind of give you the process. The land was purchased. There was a syndication done to purchase that and raise the funds that it was going to take to get it entitled. Getting pretty close to getting it entitled right now. We've met with the city several times. We had a great meeting the last time with the city. They've told us to pretty much move forward with what we had planned. So now we're engaging the architect, the engineer, and we're going to draw up our first set of plans and take it to the city. Once that gets approved, we're looking at roughly maybe 18 months of construction on that one. Or sorry, I guess I skipped a step. So we'll recapitalize it before we go vertical and do another syndication. So we'll actually, and you don't have to do it this way, there's a lot of different ways to structure it, but we would sell the land to the new entity that's going to actually build it. So those investors that came in on the land are going to get their returns, and then we'll have, they can flip their investment into the new one if they like, but then we'll have another syndication that's actually going to take it to the next level. Does that make sense?
Thank you. Yeah.
We got
All right.
any
Our
other
next
questions?
question.
Yeah.
Yeah. For bigger properties, I imagine they're mostly professional investors. How do you find underpriced assets when the sellers are professionals?
Got it. Man, there's a lot there. So,
That's the key.
I mean, I guess, can we define larger multifamily? Like, are we talking about portfolios or just anything above 100 units or?
I think you're still muted, Kai.
Can we unmute him?
Kai, can you hear us? You're muted still.
There you go.
So, I mean, when you're dealing with smaller properties, you see a lot of mom and pop owners, and there's a lot of inefficiencies, and there's a lot of value to be had. But
Yep.
when you're dealing with professional investors, sophisticated sellers, institutional investors, like, how do you find value? They're gonna know exactly what their property is worth, and they're gonna want max value, and they're likely to run their properties well. So, where do you find a good deal when you're looking at 100 to 200 unit deals?
You'd be surprised, man. You'd think they run them well. A lot of the times they don't, for different reasons. And those, I'm not saying that's the majority. The majority is what you're saying, but you've got to kind of keep looking for that diamond in the rough, to say, and it could be a large owner, you know, and maybe they, for some reason, they haven't paid that much attention to this one property. Well, shoot, you know, we the 5 property portfolio we purchased of 1,300 units. That group owned quite a bit of units, but they were kind of sick of dealing with C-class properties. They didn't have good luck with the third-party property management company that they first took on. They ended up doing in-house property management, but seemed like they weren't really geared up to do that. So I mean, it was you could clearly tell it was poorly managed, and they were willing to sell at a discount because they just wanted out. They didn't want to deal with it anymore. Their plan was to go into B and A class properties from there. So I mean, you gotta. It's a grind, man. You gotta have your criteria, be as specific as you can, and then you've got to just go out there and look for it. And don't think you can't go straight to owner. I mean, we did that on our first 2 deals. So I mean, they're still out there.
Got it. Thank you.
You're welcome.
All right, next question. Does your team work on sub 10 unit properties?
Sub.
Less than 10.
Oh, sub 10. Gotcha. Depends what the work is. I mean, if it's a full renovation and really want to take it to like the next level, yeah. I mean, if we're talking about just slapping some paint on it, maybe not. Especially, and I guess it would probably have to be in DFW or Houston. So we've got branch office in Houston and then DFW. For us to go outside of that, it would definitely have to be something larger.
All right. Next one. Let's see. Do you recommend any books or resources to learn land development from land banking all the way through vertical development?
No, but if it does not exist, I'm gonna write it because it's there's a lot to it, man. There's a lot to it, and I did not. I learned just being in the trenches on that one. As far as multifamily B and C class type properties, that I definitely I took on a coach. I listened to every single podcast you can imagine, and those things. Read a bunch of books, but yeah, on the development side, I kind of just learned on my own. So sorry, I got no suggestions there. I am starting to put more content out about it. Maybe follow me. That's all I can say.
We'll look forward to your book. All right. Does anyone else have any other questions? All right.
Hey, can you hear me, Matt?
Yeah, Steven.
Hey, I'm a part of a group, an association called NIOP or NAOP, however you want to pronounce it, and they actually have some courses for basically from start to finish on land development. So you can check that out. Just Google NAOP. I think you have to be a member in order to get the courses, but they do have some online courses for real estate development.
Awesome. Can you type that in the chat for everyone? Awesome. Any other questions?
Yeah, I guess I have just a random question. George, what's that poster in the background there? What's that about?
That is talking about that one?
Yeah.
That's my vision board.
Nice.
So yeah, I don't know if you can see it clearly, but it's got a bunch of stuff as far as a house on a beach, some good quotes from Gary Vee, Grant Cardone, Michael Jordan. Yeah.
Okay.
That's awesome. All right, Jorge, if you want to make me the host, I can put us on to our breakout rooms, and we can do some networking if people want to stick around.
All right. Should have switched.
All right. We'll go into our breakout rooms for some networking. So you should be receiving a notice to.
Hey, what's up, buddy?
Can you hear me?
Yeah.
Perfect. How's it going?
Hey, Steven. It's going well.
Yeah, appreciate you having me here.
Nice background, Matt.
Yeah. Hey, thanks. My wife actually got this picture for me, and I kind of threw some text on it.
Oh, nice.
Is that Columbus?
Yep. Down by the river.
Nice. All right.
How's it going, Levi?
Hey, what's going on, everybody? It's the first time coming out to this meeting. It's definitely a different kind of forum, the whole virtual thing, but I enjoyed it. It was good stuff.
Yeah.
Good.
Yeah, this is my first time as well, so I appreciate it.
What do you guys do?
And
As far as Levi and Steven, what do you guys, are you investing now? Are you looking to invest?
Yeah, Levi, I'll let you go first.
Okay, so I'm active duty, Air Force, 19 years, coming down to the end, looking to retire. So I, construction background, so I did home remodels for single family with my pops growing up. So I do stuff on the side by myself. So I have done some flips and then some buy and holds, all single family. I have 5 units on a 40-acre farm in Maryland, where I just moved from. But the goal has always been to get into multifamily. So I've been saving up the nest egg, that for that first deal. So I'm getting there. So now it's to the point I'm to the point where I'm okay. I need to find that first deal and figure out how to do it. So now I'm like getting into all these forums and going through all these spreadsheets and completely confusing myself. So I'm like, okay, it's almost time to pull the trigger. And then COVID happened, and I'm like, well, now I don't know what's going on.
Yeah.
COVID did throw a wrench in a lot of things.
Yes, to say the least. Yeah.
Yeah, I actually, so I'm actually an attorney. I'm a securities attorney. So I help people raise money. I actually just got off the phone today. A group out in New York wants to raise money for a hedge fund. So, that's pretty much my day. But, and I have wholesaled a few houses while I was in law school, helped pay some bills. And it's funny, I was at a meeting today, and I drove by what looked like an abandoned house. And so I got home, Googled found the owner and typed up a letter and just dropped it off in her mailbox. So, cause she doesn't live too far from me. So I still have that, I guess that mindset, but, so we'll see if I can get that property under contract. But yeah, so that's pretty much what I do. I haven't bought any multifamily yet, but that is 100% the goal. That's actually why I became a syndication attorney, because when I was wholesaling, I found some apartments that I wanted to buy, and went to try and syndicate them, and the cost for the legal costs were just too expensive. And so I was like, might as well just learn. I was already in law school, so I was like, I might as well just learn this myself and do it myself. And so now I offer that to other people, and so that's my story.
Nice. Yeah. Do you know? Are you familiar with Merle?
Merle?
Yeah, he's a securities attorney. But he also does a lot of investments.
Yeah, is he here in Columbus?
Nah, he's in Dallas.
Merle.
He's just very active on social media, so I thought maybe.
Okay. Yeah, there is
Calendar
one.
and Associates, I think is.
Okay, yeah, that doesn't sound familiar, but I know a lot of the big names, like the Sidoti Trowbridge, the crowdfunding attorneys. I know Mauricio Ruled. I actually worked with Trowbridge and Sidoti on my first fund.
Okay,
so,
yeah, then he's part of that whole.
Okay.
That whole thing.
Okay, yeah.
The big names in it, I guess.
Yeah, the big names for real estate. So absolutely. But yeah, how'd you? So you mentioned that you were an electrical engineer originally, but then you got into all this stuff. I mean, how did you learn all of it? How did you, become successful in it?
Man, so I knew I wanted to do this even while I was still going to school for an engineer, to become an engineer. And I started reading books, going to Barnes and Nobles back then. No podcasts, no YouTube or any of that stuff. And I don't know if you ever heard of Ron LeGrand.
I have. I forgot.
Old man, does coaching for single family. Still does it. Was an old man back then. He's still just an older man now. But the guy's a genius, man. He was good at what he did. Good coach. And he made it seem really easy. And I mean, we started. I think a couple months into the coaching, we landed our first wholesale deal. Made I think like 20 or 30 grand. This is in South Florida, which the spreads are bigger, but the falls are bigger over there too. But yeah, man, kind of just took it from there, and then on multifamily, when I decided I wanted to do multifamily, I got a coach as well, and whenever I say I'm going to do something and I get focused on it, I mean, I go all in.
Do it. Yeah, that's awesome.
I got
Also,
a question for all of you guys.
Yeah.
Go ahead, Steven.
Well, I was just gonna say, Leave, I appreciate your service. I had a mom, dad, stepdad, stepbrother, and brother-in-law, all Air Force. So,
Nice. All right.
yeah. So I came from a Air Force family. I was in the Army National Guard for a little bit, so I kind of was the black sheep of the family. But just wanted to say I appreciate your service.
Thank you for the support. I mean, I completely enjoy it. I mean, my career has brought me, all across the world.
Yeah.
But the government's not going to make you rich. So I gave him 20 years. It's time to focus on the family. Start figuring out what I'm doing with the rest.
Yeah, absolutely, man.
Nice. I was just curious, what made all of you want to start investing in multifamily? Or just investing in real estate in general? What's your why?
So
Good question.
for me, real estate, well, I guess it's, from 7, 8, 9, I was inside apartment buildings in Brooklyn, New York, helping my dad paint and remodel these places. So I've always been around real estate. And then I guess being military, every 3 years you have to move. And I kept buying houses and fixing them up and then selling them. And I'm like, hey, I made money. Hey, I made some more money. I'm like, there's something to this. But then as I started doing more and more single family, I realized, and then as I started going into more and more forums, I realized that economy of scale and being able to, I guess the spread that you guys talk about, it's multifamily seemed like where it would be a lot easier for me to get that generational wealth, as Jorge talked about earlier. So I have 6 kids. So I got to build a whole lot of generational wealth. But I all my kids are homeschooled. So I have all of them are 13 and under, and almost all of them have gone through Rich Dad Poor Dad and Cash Flow Quadrant, and we have our own. I'm trying to raise business owners and investors. I don't want them going through the grind of a job the same way everybody else has. Well, because as you can see, the world's going it's going completely left. So I gotta make sure they're set up for success, and to do that, I gotta make sure I know what I'm doing and I'm setting myself up for success. So real estate, it's always, so I knew the construction side. I love numbers. The military have killed me with spreadsheets and Excel. So it's something I enjoy. So I know you don't do things for money. So as I've coming to the end of my career, I want to do something I love and something I enjoy. And the construction and real estate's always been that for me. So
Awesome.
Yeah, I actually, part of it came from reading Rich Dad Poor Dad, and it wasn't until I graduated. I was after I graduated undergrad, before I read it. And I remember before that, I grew up like very broke. I was evicted from 2 houses growing up, and I had to, even as a young kid, I had to work to make money for our family and put groceries on the table. And so I grew up in that kind of environment. So like my mind was just kind of, and I still fight it a lot, that idea, that poor mindset. And it wasn't until I finally graduated undergrad and somebody recommended Rich Dad Poor Dad to me, and I read it in like a couple days, and I was like, oh my God, like I can be rich. Like I had never even considered, I never thought of it. So then, the only way I could think of to become rich, besides real estate, was becoming a lawyer or a doctor, right? And that's because even Robert Kiyosaki on one of his blog posts said, in order to start off in real estate, you need money, and the best way to do that for me at the time was through an earned income, through being a lawyer. But while I was in law school, I worked with, Matt, are you familiar with Darren Carey?
No.
Okay. He's a hard money lender up in Dayton. And I went to one of his meetups and I was like, hey man, look, I'm brand new to this game. I could help you find properties if you just teach me how to flip them, wholesale them, whatever. And so he took me under his wing, and he literally just walked me through step by step. And while I was there, I was just looking at these bigger buildings, and I kept thinking, like, how do people own these things? Like, you know, I mean, I could go in and buy this small house, but there has to be a way that these, and that's when I started Googling and everything else. And that's when I came across the term syndication. And I was like, I mean, it was like a light bulb went off my head. And ever since then, I've been obsessed with it to the point where I'm like, my law firm is literally founded so that I can help people like you, Levi. And I'm not trying to sell my company or anything, but like, I literally want to break down any legal barriers that keep people from getting into this game, because I feel like the legal fees kept me out from my first deal. And I definitely don't want that to happen to anybody else. And I still plan on doing my first deal here in the next year or so. So,
hey, bro, I already wrote your name down. I'm like,
appreciate it.
Legal help, check.
What about you, Jorge?
Sorry, I was muted there. Man, I don't remember the exact instant, but I know starting to be an engineer, at some point, I did not want to do that, and I realized that wasn't what I wanted to do. And then I didn't think about this till later on, but a lot of my uncles own their own business. One of my uncles owned multifamily back then as I was growing up, and then another one of my uncles owns a construction company. So I guess just being an entrepreneur was in my blood in a sense. I know it sounds silly, but I feel like it just was, man. And I kept tried starting a business early years of college, didn't really work out. Then I got my real estate license, my mortgage broker license, because before that I started looking into some successful individuals, and it all started going back to real estate. You know, at some point they invested in real estate and made some of their wealth that way, if not all of it. So I got my real estate license, got my mortgage broker license. I knew I didn't want to be an agent, you know, and just make commission, but I figured that was a way for me to kind of learn some of it. And then I think that pushed me even more, because then I had control of what I made. I think that was one of my things. I didn't want to work my ass off and, you know, get capped at what I'm going to get paid and make. So yeah, and then at some point that led me to finally investing in single family, getting the coach, and just going from there.
Awesome. I kind of know how you feel. I used to be an engineer too.
There you go.
it was pretty dull, actually.
Yeah, exactly.
Yeah, so what's your story, Matt? What's your why?
Well, my why has developed a little bit over the years, but it started with me wanting to help people. And so when I was in high school, what made sense to me was I enjoyed science and physics. And I thought the best way to help people is to work in the energy field and find a way to create cleaner energy, right? So I went to college for nuclear engineering and physics and did some research there on fusion, and then got a job afterwards working at a power plant in Northeast Ohio. That wasn't a whole lot of fun. I didn't feel like I was making as much of a difference as I wanted to. And so I had already read Rich Dad Poor Dad at that point, but it did not take, I guess, a foot in me until I was an engineer for a while. And then as I was being an engineer, I started looking at single family homes. My dad and my brother decided to partner, and we started investing in buy and hold single family rentals. After about 2 years of that, we were talking to some people and did some more reading and realized multifamily and syndicating was the way forward and the best way for us to scale our company. From there, we did a full 180 and switched to multifamily investing. That was a couple years ago, and the why then was to enhance the quality of life for other people. And that's still my why now, but I've clarified it a little bit to we want to help people invest in real estate simply and help our residents experience a higher quality of life, and then give our investors the freedom to focus on the magical moments that life brings us.
Yeah, that's awesome, man. And one thing that I've heard from a lot of investors that I've talked to starting this law firm is that I think a lot of them are driven by wanting to make the world a better place, and that's what I really love. That's what I really enjoy hearing from other people. And so obviously if I can be of any service in that mission, I would love to be a part.
I kind of second
good.
that. When you're talking about, wanting to change people's lives and giving them a better way of living, in a single family, you can, paint up the front, you can make the lawn nice, but you have a smaller scope. When Jorge's talking about putting in a whole soccer field, that's like, man, that's affecting a whole neighborhood, and that's pretty awesome. I can definitely get behind that. And I can see the appeal, rather.
Yeah. Hey, Matt, have you heard of, what's his first name? It's Cooper, of the Gravity Project here in Columbus?
I've heard of it. I haven't talked to him yet.
Calvin Cooper, yeah. He just started I don't know how long ago he started this, but it's basically like where he's giving each renter fractional ownership of the apartments, and his stated goal is to make every renter an owner. And so I reached out to him after I saw his face in I think it was Columbus Dispatch or Columbus Business First or something like that. And now he and I are reading this book, Conscious Capitalism, together. But yeah, I mean, I think being in those kind of shoes, like being an apartment owner, or in his case, a apartment developer, like you really have that kind of capability to make that impact. So I think that's awesome.
Yeah, I'll have to reach out to him. All right, we got about 3 more minutes. What else do you guys want to know or talk about?
So I'm new to Ohio, like 3 weeks old. So I literally just moved here from Maryland. So I've been looking at the Dayton, Cincinnati, Columbus, basically, because I'm in Springfield. I'm literally right in the middle of all of them. So I'm trying to figure out the market, narrow down my criteria, as you guys say. But trying to get that narrowed down as a new person is hard. So like, what would you recommend as a new person trying to find their first syndication deal as a starting criteria?
So first, you want to read up on as much as you can, talk to as many people who are doing what you want to do. Like Jorge, for example. And then I would pick a market that's at first probably no more than a 2-hour drive from your house. And you can look at different websites, city-data.com, bestplaces.net. Those will give you a little bit of an insight onto the demographics, the economic factors in each of those markets. There's also a Marcus and Millichap report that they do on every major market in the country, and they have some good data in there as well. Jorge, do you have any other tips for that?
I haven't bought
that book too.
First one, yeah. This book by Joe Fairless, great book. has basically everything you need in here. So
Okay.
good
Really
start.
does. So does his website. He's got so much content.
Yeah.
Sick.
Yeah.
As far as areas and how to determine where you want to invest, is that kind of
Yeah. So determine the areas, but also, I guess, C class, 50 to 100 units, kind of places you wouldn't go, or things you wouldn't look at as a first time, as far as like first time syndication deal.
Yeah, so I suggest at least 80 units, to be honest with you. This may just be my opinion, but the smaller you go, the harder it is to have the right staff, like the on-site staff. And it's going to be a lot more hands-on. My first one was 37 units, and it's literally the one that I've had to put the most work into. You know, compared to the 200, 300, 1,200 unit ones. 1,200 unit was a lot of work, but that was just because of the pure size of it. But so that's one. Areas, man. If you know, I try to stay away from the really hot areas. I'm in Dallas. I only own one apartment, one property here in Dallas. I like to look at the submarkets that are trending well. You know what Matt mentioned as far as looking at the data. Population growth is an easy one to find and look at. You just type in Google population growth in Dayton, and it'll tell you what it's trending and how it's looking. You can go back and look at history. You know, how did it fare in 2008, after the recession or during the recession? That'll tell you crucial things. Look at what's driving the economy. Make sure it's not just focused on one industry, because then you're setting yourself up for possible failure. And then once you find a good market that's not super saturated, go all in. You know, start. You can scrub data, call the owners, mail them, call the property managers that are in that area, build a relationship with them. Just do the work. Like, I know a lot of investors kind of sit back and just wait for brokers to send them deals. Those are not going to be the good deals. Those are not going to pencil out. They're not going to give you good returns.
I can't sit on LoopNet and just look at everything on there.
LoopNet, from all places. You know what though, man? If you find a market that you think is not super saturated, you know, maybe search LoopNet. Like do everything at that point. Once you know you want to be there, then just crowd the market.
Okay, all right. Well, two hour drive radius. That's a lot of markets from where I'm sitting, so that's good.
Yeah.
Maybe Steven can help me out with Ohio and Columbus area.
Well, all the wholesaling I did was in Dayton. So, and I think I mentioned I flipped a house in Kettering. That's where my first apartment. That's where I gave my first offer on an apartment was in Kettering, which is just outside Dayton. So personally, I like Kettering. It's a good working class neighborhood. Huber Heights is fantastic. You can get it's a really good working class area. That's my and you know even though Dayton's just a tough area because there's not their economy like Jorge mentioned is really centered around
right Pat.
Yeah, really centered around that. But at least it's a stable government facility. So I don't know. We can I can find you on LinkedIn and we can keep messaging. I have some insight that could help you out.
Yeah, definitely. I'll reach out to you as well.
All right, sounds good.
All right. Looks our time's running out.
Yeah.
Well, thank you guys. Thank you, Jorge.
No, thank you, Matt.
Yeah, thank you, Jorge. It's been
Really appreciate it.
very valuable. Thank you so much.
You're welcome.
I enjoyed it.